Hey guys and gals, welcome back. Greg Silverman here with another edition of Come Learn with Me. A reminder, well, first of all, beautiful Grand Canyon behind me. A reminder that we rate or rank the articles that you'll like and share and comment on. And so this is one that percolated up from last week. It's actually a very short article, but very interesting nonetheless. It talks about annual bankruptcy filings. Annual bankruptcy filings for 29.7%. I believe that's for the year 2020. So reminder that we highlight all the pertinent points, summarizing below in the article, so you don't have to watch me and you don't have to listen to me and you don't have to read the article. But who would have thought in a year of a pandemic that bankruptcy filings would fall? So let's see. This is from the U.S. courts, so short and sweet statistical article, updated March 5th. Due to technical changes, the total bankruptcy filings by chapter table was updated. Okay, good. Bankruptcy filings fell sharply for the 12-month period ending December 31st, 2020, despite a significant surge in unemployment related to the coronavirus. I guess my editorial is this is what happens when you print tons of money, right? Annual bankruptcy filings in calendar 2020 totaled 544,463, compared to 774,940 cases in 2019. According to the statistics released by the Administrative Office of the U.S. Courts, that is a decrease of 29.7%. Only one category saw an increase in filings. Chapter 11 reorganizations rose 18.7% from 7,020 in 2019 to 8,333 in 2020. Of those, 7,786 involved business reorganizations. So that's interesting, right? Business reorganizations as opposed to, I'll go through the different bankruptcies in a second. The number of total filings was the lowest since 1986, when 530,438 bankruptcies were filed. Filings fell sharply in the early months of the pandemic, starting in March 2020, when many courts offered limited access to the public. Okay, yeah. In addition, bankruptcy filings can lag behind other economic indicators. Following the Great Recession, which began in 2007, new filings escalated until they peaked in 2010. So that's 3 years later. So let's. All right, so the courts did close. Bankruptcy filings lead a lagging indicator. That means that 2023 is when we should see these bankruptcies. Filing tables are available. Business and non-business bankruptcy filings for the 12 months ended. Bankruptcy data for the 12-month period ending December 2019. Fourth quarter filings and filings by month. Bankruptcy filings by county. Okay, so those are all linked there. Here it is in numbers. So total business, non-business. So I guess non-business, most importantly, personal, right? You see that decreasing year on year. And here we have the various different bankruptcies. Let's go through them quickly. Chapter 7, Chapter 11, 12, and 13. I just looked it up over here. So Chapter 7 is your sometimes called the straight bankruptcy, run-of-the-mill liquidation. So sell everything and settle up. Chapter 12. Chapter 13, proceeding, the debtor must pay all or part of his debts from the future income over a period of 3 to 5 years through his Chapter 13 plan. For some people, the time period must be 5 years. Chapter 11, which is what saw the increase, is the chapter used by large businesses to reorganize their debts and continue operating. I think Chapter 12 is unique to farmers or commercial fishermen. So it looks like a decrease of about all except the reorganization. So that's interesting. The distress cycle perhaps lies ahead or not at all. Who knows? Anyway, hope you found that interesting. Thanks for joining us for another session of Come Learn with me. Take care. Bye.